Okay, so this is the practice exam for exam 3, which opens up on Friday. And it's over chapters 5 and 6. So, number 1, during the month of October 2017, Hollow's Cream Incorporated purchased and sold merchandise on account as follows. Using both Fifo and Lifo inventory costing method, and determine the company's cost of goods sold, ending merchandise inventory, and gross profit for both methods. All right, I'm going to pause this while I create the table, and then I'll come back. Okay, so I have the information here and can work on the paper. You know what? Actually, I'm going to go ahead and copy this as well, but I can just, I think I can just cut and paste it. Well, I don't like how that looks. There, that's better. Okay, now I can make this big. All right, so on October the 1st, we started off with 10 skeletons at $10. I'm going to put the total, and I'm going to go ahead and just copy this on down, so we'll already have it. And remember to draw a line. All right, October the 8th. Oh, actually, we didn't start with the balance we purchased. You know what, let me go back to the question and just double check that. Yes, it doesn't say anything about a beginning inventory, so that's what we've got. So 10 times 10, that's 100. Well, all right, October the 8th, I bought 5 more for $11. So then over here, when I get over to my inventory, remember you need to pull the 10 down first. So I have 10 at 10, and I've got the 5 at 11. And then draw a line and draw that. All right, then I sold on October the 15th. I sold 9 of them. Now, remember, actually, I'm not going to put that there. I'm going to do sold 9. That's just for me. You don't have to put the sold 9 here. Gosh, why do I keep doing that? I just keep putting it there because I like it there. Now, remember, this one is going to be FIFO, so this is first in, first out. And this $20, this is the retail price. All right, that's what I actually sold it for. Down here, we're just looking at the cost of everything. Okay, so if it's first in, first out, I'm going to pull the 9 out of this 10 that I first had. So I'm going to have 9 at $10. And then on my inventory, I took the 9 out of the 10, so I only have 1 left from there. And then I still have my 5 at 11. On the 20th, I bought 4 more at $12. So now I have the 1 at 10, the 5 at 11, and the 4 at 12. And draw the line under. Then on the 31st, I sold 6. All right, so it's first in, first out. So my 1's going to go, and then my 5 at 11. So I have 6 here. All right, the 1 is gone, the 5 is gone, and that leaves me with 4 at 12. Okay, so this is 48. This is my ending inventory. All right, for cost of goods sold, I add these up. There's my cost of goods sold. All right, and then sales are going to be the 9 times the 20 plus the 6 times the 20. 20, remember that 20 was the sale price. So 15 times 20 minus cost of goods sold, which was 155. Make sure you subtract it. And that's your gross profit. And then you can block this off. Control C or copy. Go to Blackboard. Hopefully it'll let you copy. I know some of y'all had problems with that. Or let y'all paste. And then right click. And you want to paste. I think it's easiest if you just paste it as a picture. And then it looks just like it looked in Excel. Okay. Okay, let's do the Lifo. All right, so first row is the same. October 1st, about 10. Cost of goods sold we don't have yet, so we have a balance of 10 at 10. Let's draw a line underneath it. All right, October the 8th, I bought 5 at 11. Oops. All right, so now I have my 10 at 10. You still bring down the first one first, and then add in the purchase. Then on the 15th, we sold 9. Remember, I'm just putting that there for me. You don't have to put that there. All right, so we sold 9, and we're doing Lifo, which is last in and first out. So we're going to start with the most recent purchase, which was the 5 at 11. And then I need 4 more to get to 9, and they're going to come out of that $10 or 10 at $10. Okay, so then on my inventory, my 5 is gone. I took out 4 from the 10, so I have 6 left at 10. Then I bought, on the 20th, I bought 4 at 12. So I bring down the 6 first. and then put in the 4 at 12. And then on the 31st, I sold 6, sorry. Alright, so my 6, I'm going to do the 4 at 12, because it's last in, first out, so I'm going to do the 4 at 12, and then I need 2 more, and they're going to come out of the 6 at 10. Alright, so my 4 are gone, and I took 2 out of the 6, so now I have 4 at 10 left. Alright, so the 40 is my ending inventory. Draw a line over here. I'm going to sum up. $163 is my cost of goods sold. All right, and then I'm going to do the same thing. All right, my sales are still 300. My cost of goods sold is now 163, and my gross profit is 137. All right, so some things I want you to realize when you're doing this is that the ending inventory and the number of units that you sold should be the same. All right, so I've got 4 units on my ending inventory, and then if I add up the number of units I actually sold, they should be the same. 15 units and 15 units. Okay, so those are both the same. And then just copy it and paste it into Blackboard. And like I said with the other one, you might want to do the right click and then paste it as a picture. Okay, problem number 2. Let me go back down to normal size. All right, Vampire Prevention Services uses a perpetual inventory system. Prepare the journal entries for the following transactions during October of 2017. All right, October the 10th. Sold 500 of merchandise on account to Ghostly Guys. Credit terms 110, net 30. Cost of goods sold is 250. Okay, so we sold it on account, so we have to have account receivable and sales. Now remember, it's net of the discount. So what I like to do, if it's a 1% discount, then I can just multiply by 99% because 100 minus 1 is 99. So I'm going to do 500 times 0.99. Right, so I did 500 times 0.99. All right, or you can do 500 minus 500 times 0.01. And you get the same answer either way. All right, we also need to record the cost of goods sold. So we're going to have cost of goods sold debited and merchandise inventory credited for the 250. All right, then they paid shipping or transportation cost of $30. So that increases the cost of the inventory. And cash goes out the door for $30. All right, then the 12th, we purchased 1,000 of merchandise on account. So we're going to have merchandise inventory and account payable. And this is for the gross amount of $1,000. All right, October the 18th, we paid for this merchandise within the discount period. So we're going to have account payable, and we're going to take the full amount out, because even though we're not going to actually give them $1,000, it's considered paid in full. All right, then our cash, well, I'll do the cash. Our cash is going to be 99% of that we have to pay out. And then the $10, the 1% discount, comes out of merchandise inventory because I didn't actually have to pay that for my inventory. All right, so this is either, well, this is the 1,000 times 0.01. And then this is the 1,000, times 0.99. All right, or you can do the 1,000 minus the 1,000 times 0.01. All right, and then October 19th, these guys up here paid us. And they paid us within the discount period, so we're good. So that we're just going to collect the cash that they owe us. So cash of $495 and credit to account receivable of $495. Oh, let me make it pretty. I guess for y'all, I'll copy the whole thing over, but on the test, you don't have to copy all this. I'm just copying it so it's over here for you to look at. All right, number 3. Okay, number 3. And number 3 might be our last one because the inventory counts for more. So number 3 is a multiple step income statement. And we have the title, werewolves, witches, and more. This is obviously from around Halloween. Witches and warlocks. Income statement for the year ended, I don't know what year, December 31st. All right, so first up, we're going to have sales, and I would skip a few columns. All right, remember, we're doing the income statement. So cash all the way down to dividends, you're going to ignore that stuff. All right, you only want to pick up the sales through the expenses. I didn't get it. All right, this is the stuff that you want to pick up. This is what goes on the income statement. Okay, so we have sales revenue, interest revenue, and then a variety of expenses. All right, on the multiple step income statement, the only revenue that goes at the top is sales. All right, and then you subtract out cost of goods sold. So 14,000. This is our gross profit. And we have operating expenses. All right, we have selling admin. So I'm going to do my selling. Selling our salaries. I don't care what order. I don't care if you do admin first or selling first. I just happen to type that in first. So I have salary expense of 2,000. And I'm going to have rent of 1,000. And I'm going to have my admin. My admin is also salaries and rent. I'm guessing my imagination was not working very well the day I made this up. 7,500, 1,500 for rent. All right, then add those two up. It's my total operating expense. So I'm going to draw a line under this. And a line under this. A line under this. And here too. Edit. All right, so then the 31,000 minus the 12, and that is income from operations. All right, then I have other items, and this one is going to be the interest revenue. And since it's just one, I'm going to put it out to the side. So 1,400. And this is income before income tax. Then I'm going to have interest expense of 2,000. Here, I'm just going to type it in normal. And remember, you subtract it. And then that is our net income. All right, so I need to draw a few more lines. Add a couple of dollar signs. And then the rest of these guys, I want to make put a comma in. Oh, I took out my double underline. Okay, and then this really needs to be centered, so I'm going to highlight it across and then merge and center. Merge and center, merge and center, and I would like a line underneath that. Okay, then copy that. And paste it. It's going to flip it to the next page, but that's okay. And there we go. We're done.